Good stuff. So for all the folks tuning in, thanks for joining. So this is a joint webinar we're doing with Checkonchain and Monochrome. So we'll talk a little bit about who we are and what we're doing. But really, Australia is a fascinating market because people just love property, and property is the thing. But Bitcoin also has a very, very important role. We have an amazing Bitcoin community here in Australia, and Monochrome being the leading Bitcoin ETF in the country. We wanted to really just talk about where the Bitcoin market is at, what we're seeing, and particularly coming at it from that ETF and what is the real case for Bitcoin, and especially in the Australian market. Grayson, why don't you give a very quick introduction for yourself and Monochrome?
Yeah, cool. My name's Grayson. I'm the COO of Monochrome Asset Management. We are an ETF provider. We started in 2021 and it took absolutely years to go live, but we finally did it. And we did it in a way that, we sat down as a bunch of Bitcoiners and thought, okay, if we wanted to build the most robust Trojan horse-esque ETF, what would we want to do? And the main thing that came out of that was the ability to withdraw your Bitcoin and use it as if it was Bitcoin. Especially in Australia, we've got Choke Point 2.0. So how can you build a regulatory moat around us such that you can buy as much Bitcoin as you want? And that's where we are now. So it's exciting times, and yeah.
Good stuff. Yeah, and for those who don't know, my name's James Check, CEO and lead analyst / only analyst at Checkonchain. Really, my specialization is, I specialize in the on-chain data, but I consider myself a Bitcoin analyst. And I like to look at things, I'm a data guy. I like to look at things from all sorts of numbers. I'm somewhere between a data guy, but I'm not your classic quant, right, where I'm running crazy algorithms and stuff. No, I actually come from the world of ground engineering, where there's a lot of finger in the air. Yeah, that's about right. That's kind of the world that I like to live in. So making sure that you trust your gut and having the data really align with it. So thanks everyone for joining. What we're going to be going over today is, it's obviously all going to be about Bitcoin, but we're going to get a bit of a snapshot of how Bitcoin performs versus traditional assets, and with a bit of an Aussie spin to it, particularly looking at the property market. We're going to be looking at the rise of the Bitcoin ETFs and just the scale and the magnitude of these things, so people can really get a bit of a feel for how significant this ETF, I guess you call it, it's a demand vector, or just the doors that this thing is open to institutional scale capital is quite remarkable. Now, we do have a Q&A, so if you are interested in asking questions, you'll find a link both in the YouTube chat. You'll also find it on this particular QR code here. So if you do want to ask any questions, please jump into the Slido, and we'll get around to all of those at the end. So I might leave this up for just a little bit so people can get a screenshot. But again, you'll find this in the YouTube chat as well, and we'll come around to all of your questions at the end. Okay, so let's jump in and talk about why Bitcoin, like why Bitcoin in the first place. And there's a few anchor points that I look at over my time when I'm trying to work out, where is Bitcoin in its cycle? How do we consider this asset versus that asset? The world is a relative place, and that means that money is going to move to wherever it's treated best. So the chart we're looking at here, for me, both personally, but also professionally, we talk about the inflation rate all the time, and people, what is the CPI, and government numbers are just bogus all over the place. What is the actual inflation rate? Over the long arc of time, I've come to the realization that gold is the correct benchmark. Gold is the current meter of value. And I personally believe it will stay that way for a long time, although I think that Bitcoin certainly has a case to be made. Now, the chart that we've got here, the next one will be bringing in Bitcoin as well. But if we can just think about what we're looking at, this is benchmarking everything to gold in a fiat lens. So how have fiat currencies performed versus gold? And I've chosen a very particular anchor date here, and that is February 2022. For those who've gone through the last bear market, if you survive that 2022 bear, you'll know that this is pretty early in the piece, and Bitcoin had a lot further to fall. And what I really dislike as an analyst is when people cherry pick data and say, oh, look, Bitcoin since inception has up 55,000 bajillion %. It's like, that's great for the 6 guys that were there back in 2009. In reality, when do people really start paying attention? There's a few key anchor points. One is like March 2020, because I think a lot of people, that's when the first big print happened. I've chosen February 22 here because that's when the US froze Russia's reserves after the invasion of Ukraine. And why this is an important anchor point is it was obviously the start of a bear. So we're not being an unfair. We're not saying, oh, let's measure from the cycle bottom, which is kind of unfair because Bitcoin tends to kick ass. But it's showing when the entire world at a sovereign nation state level, corporate level, recognize that the foundation of the economy, the financial system, the bonds, aren't what they used to be. They can be stolen, they can be taken. So that was a wake
Yes.
up call. Now, what we're looking at here is how fiat currencies, and we're looking at everything from the Mexican peso to the dollar to the euro to the Aussie, how they've performed, and they're all down 40 to 60% versus that gold benchmark. And that's, 2022 is in recent memory, and we've lost somewhere between 40 and 60% of our purchasing power. Quite remarkable when you think about it versus that gold benchmark.
Do you feel like the general consensus post COVID era, post 2022 ish, like in that time frame, do you think the general consensus has gone from inflation is just a thing and more towards like this is an actual problem and something is broken?
I think so. I think the Overton
Yeah.
window has now shifted. It's not only just like, oh, inflation's just a natural part of the economy. It's like, hang on a second. The government creates the inflation. That's the thing that I think is
Yes.
really, really important. So I think 2020 is where that really broke. 2022 is when the savings, like we're breaking apart the global reserve asset and the global reserve currency. And that's a very, very important trend. Now, if we look at gold and fiat currencies, it makes sense. Gold's had a really good run. So fiat currencies have naturally debased relative to that. But Bitcoin is one of the few assets that's actually outcompeting gold. So even with our recent correction, we're still up 80% over that time. And we have to remember, this is why I'm saying I don't want to be an unfair critic here and say, let's only measure Bitcoin in the good times. Here's the bad times. There's no question. It got slaughtered in that 2022 bear, but it has since recovered to be up 80%. Now, a lot of people in the audience will say, well, okay, let's go and look, choose your favorite tech stock. Bitcoin's just 11 NASDAQ or something like that. Well, let's bring in all the other assets. We've got the S&P 500. You can do the NASDAQ. You can do toilet paper, which is TLT bonds. You can do fiat currencies. No matter which way you want to measure it, gold is kicking their ass as well. Silver, right? It's getting kicked. Whereas Bitcoin continues to actually punch higher and higher highs. So Bitcoin is just in a different league. For me personally, I actually view Bitcoin and gold as what I call end game assets. They're the kind of things that are going to stick, like they're the things you want to own and you can close your eyes and never think about them again. They are just that long term set and forget. You really don't have to tend to them. You don't have to worry about, income statements. You don't have to worry about expenses, capex, opex, recessions. They just are. They're just forces of nature and they just do their thing. Now, let's also consider, let's go back a little bit further and start from 2020, because this is really when the big print happened. And there's the sovereign situation with bonds and gold and things that really 2022 is a good anchor point. But really everything boomed since 2020. We had a crazy market. Aussie housing as well. We'll talk about that shortly. Bitcoin, if we look at the performance of BTC versus the most high-flying tech stocks, there's really only two that stand out. You can see this kind of colorful smear down the bottom here. That's the Mag 5, right? Everything excluding Tesla and Nvidia. That's like the Mag 5, the S&P 500, the NASDAQ, any other asset mix that you would buy. Bitcoin is just killing them in terms of, this is a log scale, by the way, so it's absolutely killing them. Tesla had its time in the sun in 2021, but it has since been trading sideways. Nvidia has been an absolute star performer, and quite frankly, when you look at things at like a macro scale, we're not talking about penny stocks here, but if you're looking at serious assets that can take in institutional capital, Bitcoin and Nvidia are really the only two that have been performing very well. And, I also think, can Nvidia go from 4 trillion to 8 trillion? Not sure. Can Bitcoin go from 2 trillion to 20 trillion? Yeah. I mean, like that's my base case, right? It's not going to happen overnight, but that is actually my base case. And I actually struggle to find information to say that it's not heading in that direction. So, it's quite interesting that we're really competing with the top dogs of top dogs here. And then, of course, you're going to have the Bitcoin critics who say, yeah, but Bitcoin's too volatile. Bitcoin goes down a lot. You have those 80% corrections. Yes. So now let's talk about risk-adjusted returns, because there's a number of ways we can measure this. People often use the Sharpe ratio, which is just volatility. A lot of Bitcoin's volatility is actually to the upside. So upside volatility is good. What we don't want is downside volatility. So when we look at something like the Sortino ratio, it's more or less the same. It's risk adjusted, except we are not considering upside volatility as a bad thing. We're only looking at downside volatility. And what we can see here is that Nvidia and Bitcoin, once again, you get paid for the downside risk you take more than any other asset. So yes, there's periods where it goes down, but the upside on a risk adjusted basis is significantly better than the smear that you see at the bottom. From pretty much any way you want to cut it, we're talking about a small pool of assets, Bitcoin, gold, some of the high flying AI stocks that are really the only things that are kind of kicking ass. And again, we bring it back and say, well, if Bitcoin and gold are that end game asset, for me personally, Nvidia is not really an end game asset. I can already see areas where it's going to struggle. I can see any company you choose. I've played my hand at stocks, and generally speaking, I'm like, there's just risks that come out of nowhere for all sorts of things, and Bitcoin just doesn't really have that risk, and neither does gold. And another thing to just note is that I've been using this line, it's all one trade. You'll probably hear this quite a bit. What we're looking at here is the 365 days, so 1 year correlation between Bitcoin and gold in the orange versus the S&P and versus the Nasdaq in blue and purple. As you can see now, this is not a normal pattern where they're all correlated. Everything is correlated at the same time, and you'll hear this with critics all the time that Bitcoin's just a levered Nasdaq. That's one way to read it, but as we saw in the previous charts, Nasdaq's really not doing as well as Bitcoin is. But the reason that it's all one trade is because it's actually the denominator. That's the thing that's getting killed. When we look at the Bitcoin price, it's Bitcoin AUD, Bitcoin USD. When we look at the S&P, it's S&P to dollars. The reason it's all one trade is that the market is looking for something to save their wealth in because they know that the fiat currencies are getting destroyed. So we're in this environment, and as you said before, that people have just worked this out. There's been this click moment where they go, oh, fiat's actually dangerous. And people have always known that there's this debasement trade, and there's periods in time when fiat gets stronger and, assets go down. But over any kind of meaningful long arc of time, the denominator is going to get weaker. And they're really in a bit of a corner here in the central banking level. So Bitcoin is just in a tremendous position. Yes, it is all one trade. So if it is all one trade, why would I go looking for the third, fourth, fifth, 50th best horse when the numbers are really telling us there's a handful of winners in this mix? If it is all one trade, why would you bet on the 50th best? And we're also not talking about small potatoes anymore. Bitcoin is now in the top 10 clearly. Silver really didn't even give up a fight when we cleared it. We're now in the big leagues, multi-trillion-dollar asset. And yet at the same time, the way that Bitcoin is trading this cycle is remarkably similar to the 2016-17 cycle. But that is crazy in its own right because we're 100 times bigger. We should not be having a smaller drawdown profile than we have back then because there's just so much more capital in the space. As a fun fact, when we look at long-term holders in the market, people who've been around for 6 months or more, they're currently sitting on $1.3 trillion of unrealized profit. And they're sitting on it because they're like, that's, I'm happy. I've been holding this asset for a long time. I'm just going to sit tight. So Bitcoin's one of those assets that just keeps rewarding. And like for me personally, every time I've tried to diversify away from Bitcoin, I've got this saying that it always wants to be 95% of my portfolio. And that's either because the other stuff I buy goes down or Bitcoin goes up so much that it makes everything else irrelevant. It just has 100%. This characteristic. All right, this is the fun stuff, and maybe we can riff on this, mate. But for the Australians in the audience, how many of you have heard, but property? Yeah, okay, property. So we're not even going to talk about the maintenance costs, the special levies, the council taxes, the land taxes, the spare room taxes if the government gets their way. There's 1,001 extra costs associated with owning property. Now, for me, I actually started saving in Bitcoin. I mean, obviously, it clicked and it made sense to me as a store of value. But I've started saving in it. Really, I was initially saving to buy a house. And that is still really the plan. Now, if we go back and measure, this is looking at the Australian housing price on average in green. And then down the bottom here, here's a little fun insight. The orange curve is the Australian property market priced in BTC, in log scale, by the way. The red line that you can see here, that's 100 shares of the ASX 100, right? So take our stock
Oh
market.
wow.
If you get 100 shares of our stock market, it is the housing market in terms of performance. So when you actually think about what is your measuring stick for inflation, the Australian property market almost to the T has the same performance profile as our stock market does. Why?
That's
Because it's
crazy,
all
man.
one trade. So the other
Yeah.
painful thing about the property market is at the moment they do quarterly data on the averages and by state and all that stuff at the ABS. I suspect that when the housing market doesn't perform so well, they'll just stop doing data altogether, but we're not quite there yet. So I like to use the ASX as a bit of a read on, well, in the interim period between each quarterly data point, where do I think the housing market's going in Bitcoin terms? So, as a bit of a numbers game for me, as like an Australian individual who doesn't own property but would actually like to have a home for his family, the property market is up 43%. And by the way, this is on average. So, if you really look at it where you want to live, it's probably up substantially more than that, but up 43% in dollars, meaning that my income can buy it's only buying 43% less than what it used to. But in Bitcoin terms, it's down 91%. So my Bitcoin has appreciated so much, my savings has appreciated so much that the property market's in a horrendous depression, down 91% since 2020. And again, 2020 is kind of recent memory. And this is during a time where cost of living, dollars are being printed. For me, what else are you going to do? Bitcoin makes so much sense.
Yeah, so
As a bit of
because of Bitcoin, you're able to think of property as less of a I have to FOMO into this. I have to get on the property ladder and more so objectively, right? You're thinking about it now as where do I actually want to live? Where do I want to raise a family sort of thing. But like
yes,
also to tie back to a point you made early on, you've done this chart since 2020 and haven't just gone back to 2010 and shown a parabolic Bitcoin. Like this is recent history, and this is the
this is
current
the choppy
paradigm that
times.
we're in. Yep. And Bitcoin is still doing its thing. Maybe day to day you might not see, you know, what your uncle told you Bitcoin was, which is a 10% candlestick in the green, but on year, like it is up and to the right. So overall, yeah, it's a savings vehicle, and I love this correlation that you've got here with housing and the Aussie stock market.
It's amazing, isn't it?
And you found that out.
Yeah,
Is
I mean,
is that
I
an
basically was just looking because I was like, I
jeez?
need something Australian index that I can project forward because this data doesn't come in enough. So you kind of lose the
Yeah,
impact if you're forward filling or whatever. So I was like, well, what else is worth approximately an average Australian house?
yep,
100 shares of the ASX, ballpark figures.
yeah. That's crazy how closely it tracks. Speaking of that, like when I was at uni, we had a guest lecture. It was actually my friend who's taking economics. He had a guest lecture. It was the chief economist for the RBA, and they came in and they did like a whole thing on some stats they had. And one of the slides was uh, RBA policy and wealth inequality in Australia, and it tracked like 98%, right? And he was like, well, we can't actually figure out why this is happening, but
I
if
could
any
hazard
of
a
you wants
guess.
to figure it out, yeah, it's just
Yeah,
you're never going to understand something that you're paid not to, right? So
I can take a
yeah,
punt. Yeah, yeah. It might have something to do with this chart. So, that's the thing. You can start thinking about everything in terms of a relative trade. Everything
yep,
is a relative trade. Housing as an asset, it has obviously the value to live in, but like as an investment, and some people can say, but you can take leverage and all these kind of things. And yeah, that's true. But you can also run the numbers and say, like, most people really aren't that interested in like daisy chaining six properties together. They're looking for a place to
no,
live in. So, in terms of actually just getting onto that housing market, if you're saving in a harder asset and you've got a little bit of patience, you can rent where you want, save up for it, and your savings will do their job. And then you can actually buy where you want to live. So, it's a long game, but everything is. Investing is a long game. All right, so let's flip over and talk about the ETFs because this has been a absolutely massive shift for this cycle. They went live in January 2024. They've now got $150 billion in asset under, and that's US dollars in AUM. For a bit of a sense of scale here, last I checked, the gold ETFs globally were about 300 billion or 280 or something. So we're like getting up into that 50% of the gold ETFs, and we've been around for 20 months or so. So the growth of these things is just absolutely amazing. You can see IBIT here in the orange. It's now 50%, 57% of the total AUM. And really, it started just ripping away from the others when the options market went live in November. So all the other ETFs have actually gone flat in terms of total flows, whereas IBIT is just taking a lead. So it really goes to show what that network effect
Yep.
can do, depending on where you are and what jurisdiction.
No, credit to BlackRock. They've built an absolute monster. And you said this before in a previous podcast, like just to realize the scale of it, the market cap of all the ETFs and MicroStrategy is on par with the market cap of Bitcoin as a whole back in 2017.
At the top.
So yeah, so this is a monster thing. Um, yeah.
Yeah,
Oh, this is a
no,
cool one too.
absolutely. Yeah, it is. And like when we look at the weekly flows, we're talking about $1 billion of inflows is like a normal week. No one talks
Yes.
about this anymore. Like just a casual billion, a casual 2 billion, a casual 3 billion. Yeah, there's periods of outflows, but if you actually do the statistics on the outflow weeks versus the inflow weeks tend to be about 4.8 times larger than the
Yep.
inflow weeks. So yeah, you get 200 million outflow, 100 million outflow, 1.6 billion inflow. Like
Yep.
the scale of this thing. We're talking about yards coming in and out of this stuff, and people aren't batting eyelids anymore. The sheer
No.
scale of it is really quite remarkable.
And it's a testament to um, the new paradigm that we're in, right? Like now with the ETFs, there is an actual incentive for like professional traders to come in and start market making and managing the books, right? So now we've got the Jane Streets and the Susquehannas and whatnot. They're managing these order flows, and it's like we saw the other day. We had an 80,000 Bitcoin sell, and freaking nothing happened, right?
Price went
Compared
down
to back in,
3% and recovered
yeah,
2 hours later.
I know. Whereas like back in the day, it was like 80,000 Bitcoin, like you'd have a big red candle. So
Well, actually, I
the
can tell you about that big red candle. Luna sold 80,000 Bitcoin, and we took us from
there you go.
45K to 17. So yeah, that was a much lower price.
Yep. And so it's like you're not gonna like in this new paradigm, you're not gonna get a big red candle because of a sell, um, and vice versa. So we're seeing this market maturity. We're seeing these professional execution desks come in and have that smoothing effect on the price. And I think that's one of the indicators that we're looking at for our institutions here. And I think yes, to the extent that the trading desks are starting to really take hold of it. And they're not doing this on exchanges, right? They're not going on friggin' Binance to market dump 80,000 Bitcoin. These guys are working amongst each other, using inventory that they've already got, tens of thousands of Bitcoin that they've been storing up over the years. And now that's finally being deployed. And you might not even see that on chain, right? These are being settled collaboratively without even needing to be moved. So it kind of goes to, I remember you saying this once before, you can whale watch all you want,
Hmm.
but a lot of the movement is off the books or off the chain anyway. So
Totally. And this is
yeah,
why when I view myself as a Bitcoin analyst, yes, on-chain is my specialization, but I look at the ETFs, I look at the derivatives, I look at all these things because they're all part of the puzzle, same way that the economy has many parts to the puzzle. And to build on your point before about institutionalization, we often see when we get these big periods of inflows and also outflows, very often there's a somewhat coincident and similar scale uptick in the CME open interest. There's a lot of
mm,
cash and carry where people will buy spot short futures, sell futures, sell spot, buy back in futures. And as I was talking about before, with IBIT increasing, I wrote a piece some time back called Paper Bitcoin, which is trying to tackle this idea that there's all this paper Bitcoin out there. And I think what a lot of people didn't quite see, without a big, deep, and liquid options market, options are insurance. They allow big institutions to buy insurance on their position. If they don't have a big, deep, and liquid options market, they can't put the initial money in the first place.
correct.
So
Yes.
when they can actually hedge risk, you can buy big size. And that's just such an important insight for people to take away.
Yeah. So do you think there is a massive, scary paper Bitcoin market?
No, look, there will be times where we're going to have too much leverage, and there's no question.
Mm,
I mean, once you get Wall Street and the banks involved, things can get much bigger, but they take a lot longer to play out. You can
yeah.
still get deleveragings, but they're usually much, much larger. You'll get hedge funds that get squeezed here and there, but what I don't believe is that this cycle hasn't gone high enough, for example, because there's, Michael Saylor isn't actually buying real Bitcoin, because we've actually just seen that 100K particularly, there's just been a lot of selling. There's been huge volumes of OGs just rotating capital. And I think what a lot of people miss, because I talk about sell side quite a lot, and sell side, for every seller, there's a buyer. So when you look at sell side pressure, you're actually measuring demand as a proxy. And the demand, on these peaks, when we had the peak here in March 2024, we were seeing like $56 billion a month in profit taking, which is also capital inflow. At this peak in November, December, it was over 80 billion a month. 80 billion a month of sell side, but that's also demand. And then we went
Yep.
sideways. You know what I mean? Like the scale of this thing is really it's
And
remarkable on every level.
it's just eating it up like
Totally.
no tomorrow. Yeah.
Exactly. Now, there's one thing to measure AUM, which is that first chart, 150 billion. It's another thing to measure flows, like actual dollars coming in. The market cap of Macquarie Bank today is 56 billion. We've seen $55 billion of inflows in dollar terms coming into these ETFs, and again, in 20 months. So the entire market has bought the entire market cap of Macquarie in that 20-month period, gives you a bit of a sense of scale. And then if you then take that idea, we've got roughly 55 billion of inflows, that's the cost basis. And then we've got 150 billion of AUM. The delta between those two, that extra 100 billion, that's the profit. That's the unrealized profit that these ETF investors are sitting on, because you got your cost basis and your net result, which is exactly what this chart is showing. We're never going to get a perfect study of this, but to date, it's providing a pretty decent read. If we look at, imagine the ETFs, all the inflows and outflows, consider them almost like a big DCAing entity. They're buying and they're selling and moving coins in and out. What is the average price at which coins have come in and out of the ETFs in aggregate? And right now, the cost base is about 79K. You know what else is the cost base at 79K? The average of all investors on chain. And you know who else's cost base is at 79K? Michael Saylor with
Oh
Strategy.
well.
All of these entities have the same cost basis right now. And this is a very common occurrence because they are the average. And this is why
Yep.
when we look at like who is the average buyer, it's Michael Saylor. It's people buying and selling on Binance, Coinbase, and whatever else exchange. It's people buying via the ETFs. These are all lenses into different sectors of the market, and they're all up 40 odd percent on their overall position. So really quite remarkable stuff.
Yeah, that's very cool. How the collective, average price of the ETFs, the cost basis matches what's on chain and matches the other biggest buyers, and it all fits together quite nicely. That's very cool.
Absolutely. And you can actually see here, there's another, it's a bit of a nuanced insight. But you can see there's a handful of dotted lines here. So the red line is all ETFs. The purple one is IBIT. Notice how closely IBIT follows the aggregate. And
Yeah.
notice how they both start separating in November when the options go live. Whereas the cost basis for FBTC and ARK, which are the other two big ones, have been more or less sideways. And actually ARK is pulling back because they're seeing outflows because money is
Interesting.
going into IBIT. So we're actually seeing IBIT is now becoming the ETF market. It is getting that network effect, and the options are
Yep.
having a massive impact on it.
Very cool.
And as I was saying before, here's the average on-chain cost basis. In fact, I forgot to put these slides in. So this is looking at all investors on-chain. Average is, again, 78K. And Michael Saylor's is almost dead on this level as well. Okay, so this is the last chart to really talk about market structure and just like how different and important and significant this cycle is. Now, this heat map, I know there's a lot to look at, but this is the Bitcoin UTXO set. So every single day, we take a snapshot of how many coins were acquired at what price, and we just plot it how that changes over time. So the dense red zones, notice down the bottom here when FTX blew up, These are people stacking sats like absolute madmen down the bottom when it was the most dire. And notice that that red band continues to this day. These folks bought the bottom and they are still hodling today. We can see that 2023 period. This was actually a very interesting phase because if you imagine, we've just come out of the 2022 bear market. We've had the first rally higher. Everyone's thinking it's just another lower high. This is just another head fake. When this sell-off happened here in August 2023, the amount of panic selling was unbelievable, massive. Almost looks like a bear market. And these folks who stepped in and bought that bottom, they hodled all the way through until the 100K region. Now, the two zones I really want to highlight. Up here in 2024, this is when the ETFs, they've gone live, and we went through this 8-month period of chop. This period of chop is really, really important because if you go back to 2021, above 50K is $1 trillion market cap. Important milestone for BTC. In 2021, we got above 50K in the first quarter, and then we got slammed down in May. Went down to 29K. We tried it again. We got to 69K, and then it got slammed down to 15 in the bear. We then spent 8 months where every single dip below 50K was bought. The market proved that Bitcoin is now $1 trillion asset in 2024. That is my core read. And you can see that that demand zone remains to this day. There's a lot of people who bought that zone and just I'm just going to sit on these coins. The next phase is up here in this 90 to 110K. For a bit of context here, 60% of all dollars that have ever been invested in Bitcoin is above 75K in terms of cost basis. This is where the vast majority of investors have come in. And if we think about this from the institutional size, they don't care that Bitcoin traded for 10 cents, $1, $100, $1,000, 10,000. They don't care. Their initial cost basis is IBIT trading at 55. That's their cost basis. And all they see is this right-hand side of the chart. It's just an uptrend for them. They've never seen a downtrend in Bitcoin terms because their cost basis is $55 IBIT. So the amount of accumulation that's occurred in these two regions is really, really important. Let's argue for a second that we go into a bear market right now. These are the zones that are going to be of maximum interest. It's also kind of where the floor has now been built. It wouldn't be healthy for us to go too far below it, but it also shows that the demand has been there. My base case is it will continue to come in. So really 75K, everything above there is really kind of the new regime for Bitcoin, in my view. That's where I think we are, which is super exciting and really interesting.
And not financial advice.
Of course. But this is the thing, right? I mean, when we look at all this data, what is so fascinating about it is we're just looking at how people behave. Where did the actual inflows occur? Where did actual demand come in? Where did sell side come in? For a lot of these OGs, 100K, that has been their we'll never get their price. We got there and they're starting to take profit. And yet, as you said, you can sell 80,000 Bitcoin, the price goes down 3.5% and it's back up by, midday. Really quite remarkable stuff, just seeing how big, mature, deep, and liquid the Bitcoin market really is. And that's ultimately what we're trying to gauge here.
And this is what really needed to happen for what we were all talking about 6 years ago, which is the institutions to come in, because the institutions aren't going to go market buy on Binance, right? They're going to use these professional execution desks to get in, and they're here. So that's the leading indicator, in my opinion. And this is what we're seeing. All this activity, there's your Jane Streets, there's your Susquehannas. So very cool.
That's it. That's exactly right. And this is our last slide, and then we'll start moving into questions. Obviously, Monochrome being the Australian Bitcoin ETF. I mean, you guys have seen an absolutely meteoric rise in AUM, certainly over the last 6 months. And for me personally, I have set up a self-managed super fund because there was no way to get Bitcoin in a not self-managed super fund. And IBTC has been a fantastic vehicle for me personally. I mean, I literally hold it myself because I love the idea of that in-kind dynamic. For me personally, I ended up going with the ETF wrapper because I've got a company I'm running. I got a whole bunch of other life stuff. The last thing I needed was to be managing the self-managed at the deepest level. I was actually kind of okay to set this up and just have ETF, super clean, super easy, and I can make that decision down the road. So the income is a big thing for me, but why don't you talk through IBTC and how you guys are performing?
Yeah, no, super appreciative of the support, man. But like you said, it's been a great year for us. I think like overall, we've seen the same kind of flow as the US ETFs, but like on a smaller scale. Like Australia is so far behind the US. No one's under any illusion that, we're anywhere close to them. And I think it's due to they've got a much better and more robust advice network that isn't afraid to talk about Bitcoin. And it's all there for the taking. I also want to touch on, you mentioned the in kind, and we've seen a lot of stuff on Twitter about the US ETFs talking about in kind. And we saw from the SEC a couple of weeks ago that they finally approved it, blah, 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 and that it is only for the authorized participants. So just to clear that up, the US in kind is not for mum and dad investors or you or I going in and being able to withdraw the Bitcoin. That is for the market makers and the institutional players that are creating and redeeming the units. That just means that if they need to create 10,000 units in IBIT, they can put Bitcoin into it to get those units. It doesn't mean that John Doe can buy a couple grand and withdraw it. So there's a big difference there. There's a lot of nuance, and I think all of the Bitcoin publications kind of screwed up by hyping it up to be something that it's not. And yeah, I mean, it's pretty cool how it works actually, like the real in kind. But if anyone actually has any questions about that, you can always call us up, and always happy to chat about that. But yeah, like in Australia, it's super far behind. But I think we've been pretty lucky with exchanges over the past decade. Anyone who's wanted to buy Bitcoin has been able to, up until Choke Point 2.0 came along. And now we're just trying to see, where's the angle for. I saw some of the questions in here, hit the nail on the head, industry supers and advisors and things like that to actually start talking about Bitcoin. So,
Nice. All
yeah.
right. Well, I've just brought up the Slido link, so if people have questions, please feel free to filter them in there. And there's a couple here for you, Grayson. So let me ask them. I'll kind of step through them one by one.
All right.
There's a first question here on any chance of making IBTC access for self-managed super. Do you want to just talk through that kind of angle of, I mean, for me, that's how I've done it, but any insights from your end on the SMSF front?
Yeah, no, I mean, like, it's easy. It's available for SMSF. It's as simple as setting it up for your brokerage account and typing in IBTC. Like the beauty of it is, and I'll try and kill two birds with one stone here because someone asked like what brokers or institutions allow the purchasing of it, and the answer is all of them, except for Macquarie actually. But ComSec, NabTrade, Westpac, blah blah blah, all of them allow you to buy IBTC, and all you have to do to redeem that Bitcoin is transfer it to the unit registry, create an account, and Bitcoin's out the other end. So like we actually see the majority of volume come through ComSec, which in Australia is the big bad wolf for blocking transactions to exchanges. But with our product, it's been really good. So SMSF, just as simple as setting up a brokerage account, and Bob's your uncle. I can't advise on any like I can't say where to go to set up the SMSF. Like I know eSuper is a big one. I think most of them come from there, but yeah.
Yeah, I actually set mine up via Stake because they've just got a really clean and simple
Oh, true.
interface. Yeah, no, that was the thing. It just took so much like of all the admin. That for me, that was the perfect solution because it just resolves it all. It's all in one platform. That was great.
I had
Actually, I
no
got a
idea.
couple of questions. Yeah, no, it's
Yep.
really quite clean. So there's a couple of questions here which I might ask, and I might stitch my own angle in here. One was how many IBTC shares equal a full Bitcoin? But I think just like building onto that, how do you guys think about that? Sorry, and the other one is what are the advantages of holding IBTC over direct Bitcoin? So maybe that's kind of linking into that in kind. Maybe just talk through some of the details of like how that kind of structure actually works. What are
Yep.
the advantages that you get from IBTC versus spot Bitcoin? Because there are some.
Yeah, I mean, so we started off like when the fund actually kicked off, it was actually an unlisted fund before it was an ETF, so it was about a year before it went live. We started off as 10,000 sats per unit, and every day there is an accrual to match the management fee, such that every day 0.25%, which is the management fee, divided by 365 is clipped off each unit. So at the moment, it's just over 10,000 units equals one full Bitcoin. That number does go down very slightly to match the management fee every day. We publish that on our website. And if anyone has any more questions about like how it really like intricately works, I'd love to chat about that. And the reason we accrue it every day is so that we can track the price accurately, right? Because if we just took all the fees once a month or once a year, you would have a massive tracking difference on that day. And that's not what we want. We want it to actually mimic the price of Bitcoin, and we do that pretty much better than anyone else. If you compare against, like BlackRock and Van Eck and whatnot, which is pretty cool. But the advantages of holding it over Bitcoin, look, I'm not going to go out and say you shouldn't have your own keys and you shouldn't, hold your own Bitcoin. Like, I hold my own Bitcoin as part of my stack, but I also hold IBTC as, that is a risk mitigation against myself, because the biggest risk to your keys is the dude between the chair and the keyboard. So
Totally.
it's a little bit of peace of mind. And we're starting to see cool things like if you have IBTC, you can go to, I don't want to say the name of the bank, but there is a bank in Australia who will collateralize it alongside a mortgage and allow you to borrow against those two things collectively. So essentially, having Bitcoin in a traditional wrapper is starting to get access to that, TradFi playground of really nice interest rates, essentially. And this is only for like super high net worth stuff, very early days, but it's a good glimpse into what we really want to be able to happen, which is the actual financialization of Bitcoin.
Yes, and I think that collateralization and the loans and stuff, we're early in that product cycle now, but you wind this clock forward 5 years, it'll be very, very common practice. There's a
Yep.
good question here, which I might pick up, saying, when is it okay to sell some Bitcoin without feeling like you're leaving gains on the table? And the way I want to frame the answer for this, because it's actually a very good question, a very common one, have your goal in mind. Like, this is the thing, too many people worry about, I want to sell tops, buy bottoms, and like they don't actually know why they're doing it aside from but number go up. Have a goal in mind. Think about why you're actually, like, for me, I'm saving to pay off my long duration assets. And what are those long duration assets? I'd love to, when I have one, I'd love to be able to clear the mortgage one day. Just done, gone. I'd love to be able to pay to make sure my kids get a good education. At some point in time, I'm saving for their education now, because when the time comes, the Bitcoin will have done its thing and devalued the same way it devalued the ASX and the housing market. It will have devalued the school fees as well. So the way that I view it is as a savings account. So actually having a plan, knowing what your goal is in many ways considerably more important than just trying to pick tops and bottoms, because too many people do this without actually knowing why they're doing it in the first place. Go back to step
Yeah,
zero.
definitely. I also want to add, like, a lot of people fall into the trap of making the stack their number one thing, right? And then in that situation, the Bitcoin ends up owning you rather than the way it should be, right? And
Yes.
it becomes a situation where you round trip yourself into just doing nothing again. And having gone on the hero's journey and learning all about it and just ending up in a point where you're not living and looking at a screen, that's not what it's all about. The Bitcoin is there for you to take advantage of your life and do the things that you want to do, spend time with loved ones and be free realistically. So yeah, don't let the Bitcoin own you, own the Bitcoin.
That's it. Now, there's a question here which I'll let you kind of work out, because I'm sure there's things you can and can't say. But there's a question here about how you guys manage custody and keys. I mean,
Hmm.
you probably can't share too many trade secrets, but maybe just talk about like the world of custody, either in the ETF world or in the institutional world, just how you see that kind of general landscape shaping up.
Yeah, no, I mean it's pretty cool. I mean, most of the big custodians have very similar practices. In our case, we use Gemini. Uh, we we partnered with them back in the day because I don't know if anyone remembers, but they were going to do a product with ComSec. And essentially, to be a custodian in Australia, you have to meet the Australian custody standards, RG133. And ASIC goes through their processes with the magnifying glass and, checks all the boxes, right? So they had all that set up. They get audited in an operational audit once a year by Deloitte. So SOC 1, SOC 2 operational audits. They make sure that, they're doing everything they say they are in the back end. And obviously, it's all offline, multi-sig, geographically distributed, all the stuff that we wish we could do on our own, but when it comes to it, can get a little hard. So at our end, we actually don't control any keys, right? I don't have a key. Our CEO, Jeff, doesn't have a key. We leave that to the professionals because you don't want to end up in I forgot who it was, if it was Bybit or some recent big exchange got exploited because the CEO had a key as part of a multi-sig and he didn't check the address that he was sending to against the address that was on his Ledger Nano, I think it was. And it ended up being a big fat finger. So leaving it to the experts, and yeah, taking that operational risk off of yourselves is where we've ended up. And all of them, BlackRock, VanEck, blah, 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 operate on a similar basis.
Yeah, and the custody setup will evolve and change as well. We've seen SARB 121 get overturned. The banks are going to start getting involved. The custody setup as it is today will continue to diversify, and this is a good thing as well, right? We're going to get local entities at some point, but it just takes time for the market structure to get built out.
Yep.
Here's an interesting one. I mean, this is, again, a bit of speculation, but what do you think the next bear market will look like for Bitcoin and how are you preparing for it? It's a very good question. And the truth is, the way I like to frame up bear markets, it depends. The bull market will author it. So if you get a crazy, explosive, vertical price candle, you wake up tomorrow and the price is 500K. Now I can construct for you an 80% drawdown, right? Because these are unsustainable moves. The stair-stepping price action, that's why I like that heat map chart from earlier. With building and acclimating all of our investors, as the market climbs, people become more used to it. Could you imagine telling yourself 2 years ago that you would feel normal? Bitcoin would crash to 110K and it would feel terrible? Like, imagine explaining this when the price is at 20 grand, right? You couldn't do it.
Yeah.
So people become acclimated to these new heights. So the bear market, and that's why when I was looking at those heat map zones, if we were to go into a bear market right now, if I had to just give you a number and walk away, that 80K cost basis, ETFs, Sailor, active investors, that dense zone of demand, 2024 chop, just above $1 trillion market cap, I can see the headlines, whole market liquidated, it's over, it's dead, and it'll be trading at 80K. If we go up much higher, then, it totally depends on the path that we take to get there. So that's how I like to think about things, like where are those max pain points? But the truth is we don't know. How do I prepare for it? I already have a plan right now for what happens if we go to 80K. I already know exactly what I'm doing. I'm selling chairs. I'm selling my fan. I'm selling everything, right? That's my personal plan. But the secret to preparing for it, I know this sounds kind of circular, is to prepare for it. Just mentally go through the loops of what you're going to do in a bear market, right? And however you want to frame up the market, make sure you're thinking about these things ahead of time. And anyone that you see telling you something can't happen, except maybe $1 million tomorrow, that's probably not happening. But anyone who says that a down move can't happen, there are no bear markets, they're kidding themselves. They don't know. None of us do. So never rule stuff out of the equation because all these things are possible. All right, I think we're getting to the, we'll have to wrap things up shortly, folks. Let me just see what else we've got. I think there's a few here which is getting a little bit into the how do I buy my portfolio, which we can't go over. So forgive us for skipping over those ones. Here's a good one. How long has IBTC been going? And just want to understand a little bit more about the history. Why don't you close out on the bit of the history of the IBTC entity and what was the original idea that got you to where you are today?
So, geez, our founder and CEO Jeff and I used to work at Binance Australia in 2020, and it was that point in the market where everything is going parabolic, and it's like, hell yeah, we're geniuses. And we started getting these big entities trying to buy Bitcoin, and it was like, we knew back then that, although we had the Austrac registration and all this stuff, like at the end of the day, crypto exchanges in Australia are unregulated. Um, so, and we were already seeing like transactions being stopped and whatnot back then. So the choke point 2.0 was starting to come in. So the idea was, what is a product that we could build that was absolutely irrefutable? You can't get stopped with, and is the most robust thing ever. Um, and that's where we started Monochrome. It was essentially, how do we build the onboarding for what we perceive to be coming, which is the institutions, and how do we do it everything right from a Bitcoiner lens? And that started in 2021. It took us 3 years to get the unlisted fund up, and then another year after that to get that listed, and that launched June 2024 as the ETF. But that whole time, it was, it was a very cool learning curve of how do you structure a fund that lets people own the asset that is within it. And we actually found an old gold ETF that was structured this way. It's called a bear trust, right? So the bear trust allows you as the unit holder to have ultimate beneficial ownership of the underlying asset, and therefore allows you to call upon taking delivery of that asset. And that's what this gold ETF did. And you could withdraw the gold to a vault in London and go collect it. It was actually pretty cool. It's not around anymore, but that's what formed the basis for it. And yeah, how do we make sure that we're tracking accurately? And we went through this whole thing of talking with all the execution desks and learning about, like I was saying before, these big guys that are now in the market and smoothing everything out. So just to answer one more question, yes, it is fully stacked with Bitcoin. Everyone's Bitcoin allocation is 100% sitting there. If everyone withdrew at the same time, everyone would get their Bitcoin. And yeah, look, if anyone has any questions, always feel free to call up, or I'll probably be on the other end of the line. Just head to monochrome.au and you will see some contact boxes, and always happy to chat about our ETF or Bitcoin itself. But yeah, thank you so much, James and Alec. I think you guys are freaking amazing. I think you're very very mature with the way you present data. You're very unbiased, and like honestly, this is the best place to get realistic, not hopium, but also not depressing, just signal in the Bitcoin market. So thank you so much
Thank
for
you, mate.
having me on, fellas.
No, that's good. It's been great to have you, and all the best with the ETF. We love the product. Again, as I said, I own the product, and we were able to scratch together the chart that you're looking at today in about 5 minutes before the call. So that was a quick win. But thanks everyone for tuning in. If you want to find us again, if you can find Grayson and Monochrome over at monochrome.com.au, you'll find us over at checkonchain.com. And thanks for tuning in. The recording of this whole session will be out shortly. So thanks a lot, folks.
Cool. Thanks, everyone.
Cheers.